All right, guys, we got the FOMC Minutes report going live in not that long, about 45 minutes or so. So stick around. We're also got NVIDIA earnings going live after the closing bell today. We're going to cover that as well here, chat. So just be on the wait for the FOMC Minutes report and bell today. We're going to cover that. Yeah, we'll see what it looks like. Let me do a poll here. We're going to do a poll right now. Let me know what you guys think. Are you bullish or bearish on today's FOMC Minutes report? Yeah, you can see NVIDIA mostly flat. I told people we'd probably have flat action early this morning, and that's kind of what we're getting here. It's just sideways, like neutral, choppy behavior. So, could be worse. There's the poll. The poll is now live as well. I got this thing. It's called caffeine water. How much caffeine does it have? 20. Okay, that's not bad. It might. We'll see. Yeah, we're also going to trade a little bit right now. The U.S. semiconductor ETF SOXX recorded $750 million in net outflows in May, the most since February. We had the Fed repo just happened. The European Central Bank's Villeroy said more rate cuts are possible in the coming weeks. Vice President J.D. Vance said, "We do not believe Bitcoin competes with the U.S. dollar." He said Bitcoin will become a strategically important asset for the U.S. And look at the NASDAQ start to push up a little bit here. So the NASDAQ is fighting, going green after a very choppy day. I mean, we broke down a little bit earlier, but it's just a really choppy day. Sideways, small range. Starting to head back up, though. We're over that 200 EMA here. So leading into the FOMC Minutes report in 40 minutes. We got some time. Yeah, let's put a timer up. All right, so here is the timer for the FOMC Minutes report. We have 40 minutes left. We'll hang out, trade. Yeah, we got the timer up. Nice. All right, looking at our poll numbers, 52% are bullish on the FOMC Minutes report, 26% are bearish, 25% now, and 21% are neutral. So most people are either bullish or neutral. Only quarter of people voting on the poll are bearish on this report. And we're starting to head up a little bit. I mean, we look strong. We'll see how it goes. But I'm green on all three accounts that we've traded today. I'm trying to like slowly build. Micro. We're approaching 21.5s too, so I mean, it doesn't look horrible. We get a dip. Identify the account. Okay. Yeah, I'm kind of bullish right here. I want to see if NVIDIA breaks past the top of this range. So we'll see if it does. I want to see if it hits 21.5s. Push up to maybe break that spot. Here's NVIDIA at 136s here. And so let's talk about the big story for the FOMC Minutes report. It might, Mr. B, like, we don't know if it's going to have a big impact or not. Sometimes it does, sometimes it doesn't. It depends. And I think leading into NVIDIA earnings is where it gets the most interesting. It's a decent amount of volatility. The range is tiny right now, but, you know, I'm hoping we get some good action leading into NVIDIA earnings. We'll see, though. You never know. I mean, sometimes it has a big, you know, big reaction. Other times it's slow and kind of boring, so maybe. I hope we get some type of stuff. Again, we're heading into NVIDIA earnings, which are a pretty big catalyst for today. I would say the NVIDIA earnings report, which we're going to stream fully live here as well, is probably the biggest report we're going to get today. But you never know. You know, you want to pay attention to, like, it's set to release today. It's expected to underscore the bank's cautious approach. Policymakers maintain the Fed funds rate paused rates last time, citing concerns over stagflation driven by recent tariff policies. Jerome Powell likened the current economic climate to driving through the fog, emphasizing difficulty in forecasting due to conflicting indicators, stable unemployment, and targeted inflation, juxtaposed with risks of tariffs and fluctuating gas. Yeah, so that is kind of where we're at now with all this stuff. And, yeah, we'll see what happens. You know, I'm worried the market's going to be flat, but we have a couple hours until the market closes here. And so we got some stuff to watch, but NVIDIA is poised to release its earnings this evening. Stock is trading at 136. NVIDIA is also ripping up right now, too. Look at NVIDIA. I gotta sneeze. Hold on. I'm sorry. It's a big pullback that we're getting right now. A very large pullback. Let's see if it holds. Market's trying to rip back up. We might just be ranging sideways. I mean, who knows how the market's going to behave right now. It's a big surge up. We got a little dip and then a retracement, but look at NVIDIA. Like, I'm kind of optimistic here because, like, NVIDIA is making a move up, you know? So, like, look at NVIDIA run a little bit right here. NVIDIA up to 163.30s here. So, like, I want to see if NVIDIA keeps popping up. Let's see if the NVIDIA and the rest of the market. What's dipping down here? I'm looking at Netflix. I know Netflix is right around all-time highs. Looking at AMD, pretty flat. NVIDIA, obviously a huge thing, but NVIDIA is ripping up here. I'm curious as to why the rest of the market is falling down some as, like, NVIDIA pushes higher. We got the 200 EMA right below us. Are people worried about NVIDIA earnings on the short side? We're all the way back down to the 200 exponential. See if NVIDIA continues to rise. Let me catch the chat. What's up, Papa Pump, Fox, Demetrius? Yeah, we're hitting that 200 exponential here, but it's strange because, again, NVIDIA's ripping up. I'm trying to see what other blue chip stocks are heading down here. And if the market just starts turning sideways or what. Did some news come out recently that drives the market down, or some big investors getting front loaded into stuff? Okay, wait, so there's some news here. Let me see, where'd it go? Okay. We got the socks thing, but Nvidia dipping all the way back down. Gold is bearish. Microsoft. Yeah, Microsoft could be falling. Yeah, Microsoft's been trending down. I think we're kind of in this choppy sideways trend, though. We need long term. Yeah. I mean, it looks like the trend's slightly higher. Nvidia's still making that push up. Like, look at Nvidia go up to 136.30s. So it looks like Nvidia's still trying to get up there. But the range is small. AMC going up a lot. Yeah, well, GameStop bought a bunch of Bitcoin. And so with GameStop buying all that Bitcoin, I mean, AMC's kind of sympathy moving with it up. The news with GameStop buying up all this stuff was big news, breaking news this morning. And so GameStop, it had a pretty big turnaround, though. I mean, this thing got all the way back down to $30. It was at 37s this morning. So it's a pretty big percentage drop for GameStop. But, you know, look at Nvidia still rip. It's at almost 137s right now. Nvidia is what's rising. Yeah, let me show you. Let me see. Which one are we on? Okay, yeah, we're on the right one. Yeah, Bitcoin. GameStop bought $500 million worth of Bitcoin, and they still have a bunch of cash left, is what kind of drove everything up with them. They bought hundreds of millions worth of Bitcoin. Yeah, so the FOMC Minutes report is a detailed breakdown into the current economic landscape, as well as some future projections into what the Fed might do in the next meeting. So the FOMC report is valuable. It's a 12-page document that we're going to break down using kind of AI to break it down. We'll have thousands of people here watching it, but that's what it is. It's like a detailed document that kind of breaks down what's going on in terms of the Fed decisions, like what a probable next step in the Fed might be, and all that stuff. Market's still pretty sideways trending. Here's Nvidia dipping down some after this big bull run here. It's not the biggest run, but it's something, you know. FOMC, it's not a meeting, it's a reaction to the last meeting, is what this actually is. So it's not a meeting, it's a detailed decision breakdown on why they made the decision they did during the last meeting, if that makes sense. Yeah, the Bitcoin conference is going on. Advance has said some positive things regarding crypto as well. And so he basically said that Bitcoin's going to be like a useful asset for the United States, is essentially what he said. That Bitcoin's going to be very useful by the US, and that the US is going to be using it pretty heavily. Mark Zuckerberg recently gave Japan's McDonald's a glowing 10/10 review, joking it deserved a Michelin star. I don't know how much of news this is, but BlackRock planning to acquire 10% of the Circle IPO shares. Nvidia still creeping up. It's really hard to tell what kind of range we're going to get here in markets. I think we're probably going to be choppy sideways, but you never know. Sometimes we get some like deep volatility leading into it. Where's Bitcoin at? I'm guessing Bitcoin's down today. It's surprising because we've heard some really optimistic things regarding it, but I think Bitcoin's kind of, you never know how it's going to respond. I've seen mostly good news about the Bitcoin conference going on for it. Yeah, look at the market choppy. Kind of expecting it to keep chopping sideways every time. Yeah, it's kind of a buy the rumor, sell the news event. It's kind of like a long time ago we had like Dogecoin 420 day or something like that. And everybody thought Dogecoin was going to run because of stuff Elon Musk was doing on that day of April 20th. And instead, like we just got like a lot of pullbacks, like big drops fast. You know, like we dropped very quickly on that day, and so it's kind of a buy the rumor, sell the news. I think crypto especially behaves in that way, where leading into things it can run, and then after the thing it's leading into happens, it fades. People take profit. You know, they buy it back, but I think that's kind of what goes on. DJT. Yeah, DJT had all that Bitcoin news and it fell pretty quick too. So again, we got 25 minutes before the FOMC Minutes report goes live. 25 minutes. This is a little bit less hyped up today versus what it usually is, I think, just because today's NVIDIA earnings day. And so we're going to kind of lead. We're going to cover this, the FOMC Minutes report, and then we're going to stream NVIDIA earnings right after it. And we're just going to redirect everybody to the NVIDIA stream afterwards is the plan. So we're going to cover NVIDIA Fed Minutes report in about 25 minutes. And then we are going to be hanging out covering the NVIDIA earnings report afterwards. Just stick around. We'll cover it all. No, so Jerome Powell's not speaking. We're not going to see cuts. This is a detailed reaction to the last FOMC meeting. So today's minutes report is a reaction to the May 7th FOMC meeting. The FOMC meeting we got May 7th, right? So that's what this is a reaction to, is that May 7th meeting. So that's what we're looking at. And but it gives out outlook as well. market's getting even more choppy ahead of this report. We got 23 minutes left here, but market's really stagnant and sideways. So hopefully Nvidia mentions Amazon Web Services. Yeah, I mean, it's going to be relevant for all of this. Time will tell, though. Like, Nvidia's earnings should be big. It's not as big as it once was. Like, a couple years ago, it was huge. But from now on, it's just less big, you know. It's been less interested. But it's still important, and we're still going to stream it, but definitely less hype for it recently. So we're starting to get some weakness ahead of this report, though. We're going to kind of swing forward in one of our challenge accounts just to kind of get some fun in here, but Warren, Karen Buffett, yeah, maybe. I gotta fly this. Let's see if Nvidia makes this another retest. Who's their CEO? Jensen Huang? Nvidia? Everybody knows Nvidia CEO, brother. Bitcoin back down to 107.5s or so. Nvidia bull flag, maybe. I mean, we got this push for Nvidia testing highs up here. The rest of the market's kind of stubborn. We don't know what it's going to do. But looks like it wants to come back higher. Too bad no challenge for Nvidia. Nvidia beat earnings and drops. Yeah, Nvidia is expecting, what is it for their earnings? Nvidia is expecting 75 to 85 cents EPS revenue of 43 billion, give or take. So right around 43 billion EPS revenue is what they're expecting. We'll see if we can hit it, but you know, it's a big if. Market's really sideways, boring ahead of this report. We got 20 minutes left until the Fed minutes report, and the market is in a range for sure, but I would say if we have a trend here in markets, it's this leading into this report. Let me see if I can get the parallel. There it is. Let's say here's the trend. Starting to see bearish action in markets here, chat. Some deep red action showing up. We had the bond auction and some other stuff, but maybe we'll move. We have 18 minutes ahead of this report. How confident are you that it's going to be bullish at the news release? I'm not confident at all, man. I have no idea what this report's going to do. Genuinely no idea what the FOMC Minutes report is going to do to markets. No idea. It might go up, down, sideways. A lot of it depends on the outlook, and we're going to summarize that first and kind of break down the outlook from this report. But in terms of predicting what we're going to do, nobody freaking knows, especially right now with the landscape of, like, we have we've got NVIDIA earnings right after this. So it's a day in which we got a lot of big catalysts. And I would just be very careful. We're in this basic trend right now, slight upward trend. We'll see what we get, but we're very sideways, neutral right now. We're slight. I would say it's slightly bullish, but the last 10-20 minutes have been bearish. So just be careful, guys. Like, I don't know what we're gonna get. Time will tell. We did lose one of our challenge accounts, kind of playing some size, but we're trying not to lose our funded accounts just because we're bored right now. So that's kind of how it is. Hey, what's up, Cosmo? All good, brother. NVIDIA goes 9% down, Bitcoin is way. Yeah, I mean, maybe 15 minutes until the FOMC Minutes report. We got about 1,000 here. Yeah, I mean, I started getting back in, Alex, whenever I'm not gonna be too specific, but I started getting back in whenever we like, so let me show you guys real quick. So basically what happened is that, sorry, I'm kind of in a trade on this other account. I'll show you guys it. We're in micros, but I gotta be quick here if I'm gonna show you. All right, take a third of that off. Another piece. Maybe we'll buy back 5 here, see if we retrace back up there, then get out the rest, break even. Riding this up. I don't want it to reject the 200 exponential, so the closer we get to that, let's take another piece off here. And we'll cut the rest, break even right there. We're up about 600 on this one. Still in that trend line that we drew here. Very obvious trend, and I think now is one of the better days to attack trends like this, just because everybody sees this thing right here. Like, look, everybody sees the same thing, which is this right here. Same thing. We get to the bottom of the range, people start buying it up. Here's the 200 EMA, so kind of a middle line level. But yeah, so I started buying stuff up just to put up the queue here. So this is basically what happened. We had the 90-day pause news, or we had this big breakdown here. Okay, we had this big breakdown. Once we rebounded back up, we had the 90-day tariff pause news right here. So once the 90-day tariff pause news happened and the market rebounded back up, and then the next day it slumped back down a little bit. I bought that pullback right there. I bought like AMD, I believe Tesla, Amazon, might have been Netflix. I have to go check what I bought. And so, yeah, that's when I decided to start entering stuff again. I sold in December a lot of stuff, and then I bought back in after. I know it was after the 90 days, the original 90 days, not the China 90 days, but the original European, or the original 90-day pause news that made the market go back up like 10% in a couple hours. And then the next day was like a really red day, so we pulled back some like 3 or 4%, and that's when I bought back in. I think that's a good time to buy it too. All right, Chad, we got 13 minutes or so left. 13 minutes, kind of boring right now, but obviously we're watching NVIDIA. We got the Fed minutes report in 12 minutes though. So, The Japanese bond market's been kind of sketchy too, to be honest here. Like, the Japanese bond market has been a little shady, you know. So yields have been spiking. The underlying bonds have been weak. All right, so we're gonna add to this dip here. We got a cushion in this account, so we'll try to hold it break even. I just want to see if we retrace all the way back up fast. There we go. I'm gonna take half of that off, or a piece of that off. More. We can hold this with a little cushion here. See if we bounce back up. There we go. All right, Chad, we got 11 minutes. There we go. Hey, this worked out really nice. Okay. I'm gonna add a little bit to this just because I can, and we'll play around with it at the top. But we've already made money in this. Staying in this trend. We'll go ahead and get out of this. All right, so we're over $600 in profit in this one. That trend line's holding well. Is the music volume too low? I mean, it's kind of a quiet song in all honesty. Bro, is my wife ordering DoorDash? All right, so NVIDIA is still pushing up. That's kind of one of the drivers of this short-term rebound. It looks like I got out at the right time, though. Like, look. Yeah, I'll be all right. Today I made $277. I'm happy. All right, guys, so remember, leading into this report, we got 10 minutes left. Let's talk about it. Okay, so the Fed paused interest rates earlier this month. Okay, they did this because they blamed it on the tariffs. And so if we didn't have inflation risks from these tariffs, the Fed would just straight up cut rates most likely already. They would have already cut rates more. They cut rates a full percentage point in the last 3 months of last year, and then they've been pausing since then, which is about 5 months in now. They're probably going to pause next month as well, which will make 6 consecutive pauses in interest rates. And again, they're blaming this on the tariffs. So what I'm wondering is if we'll get updated data today regarding, the Fed's not actually speaking. It's just a breakdown of what the Fed might do, but it's important because right now we're on a 90-day pause for most tariffs. we still have some tariffs in play, but it's definitely not what it was when the Fed made that pause decision. And again, the Federal Reserve, their job is to maintain balance. I talked about this earlier. The Fed's job is to maintain balance. One side is risks to the economy, like recessions, economic weakness, high unemployment, stuff like that. The other side is risks to price stability or inflation. That's called their dual mandate. Their dual mandate is risk to the economy and risk to inflation. And so their job is to maintain balance between these two. And so the Federal Reserve, they don't want crazy labor market with prices spiking up too high. They want a balance between the two. And so what they're basically saying right now, if the economy's weak, they can cut interest rates, stimulate it. They can do a more desperate thing called QE, or quantitative easing, which is money printing. They create online bank reserves. They buy bonds and other MBS assets, stuff like that with it. It injects liquidity, keeps interest rates down. It's a more desperate decision because it can cause more inflation than just straight up lowering interest rates, the standard way. And so if inflation's a risk, they'll be restrictive or hawkish. And so they will, in turn, raise interest rates, maintain them at high levels. They will take liquidity away from those markets through quantitative tightening, which is actually something that they're still doing. And so I want to really focus on that during this report. See if they're going to say anything about when they're going to end QT. The last time we talked about it, they were still doing QT. They reduced it by 80% in treasuries, but they were still doing mortgage QT fully at the rate they've been for the last year or two. So quantitative tightening is a theme of today's FOMC Minutes report as well. It is probably something that we want to tune in for just to see if they're going to give us some updates on that. And again, we're going to use AI to break all of this down. So just be ready. We're going to use AI to just break all this down. So stick around. Let me know if you're hawkish or dove, if you think they're going to be more restrictive or less restrictive than they were last time. I think it's all relevant and important to understand. So. $28 trades today. Amazon doing a collab. $277 is pretty good. People keep telling me the music volume is low. I can turn it up a little bit. Let me know if that's better. I mean, hopefully you can hear it now. Again, we got NVIDIA earnings today. Very relevant, hyper relevant, obviously, with all the stuff going on. We've got 5 minutes left. Chat, 5 minutes left until the FOMC Minutes report. Christian, you got to hit that live button, brother. Here's a hack for that. If you put it in 2x speed, regardless of latency, it'll keep up with the stream. So if you put it in 2x speed, it shouldn't make me talk like a chipmunk, but it should also keep up with the stream. And so if you want to make sure you're always live, just put it in 2x speed. Every time you turn on the stream, put it in 2x. It'll keep up. And you'll also be really on time with data releases that we do. In this case, we got one in 5 minutes. And so that's what it is. Gold, honestly, gold has been interesting lately. I mean, gold's been pulling back from highs, but it's still pretty freaking close. I mean, all-time highs for gold are right up here at 3,500s. We're at 3,300. So, I mean, like, we've been slightly pulling back for gold. Like, here's the trend over the last few weeks. Like, it's a slight downward trend, but it's not a huge, like, decline. It's not a big angle down. And so it's worthwhile to watch. If we get more negative tariff news, this is probably going to spike up. But we'll have to wait and see. Gold is a historical inflation hedge. The other thing, though, is that gold has been trending higher. Gold has been trending up for a decade now. Almost a decade. 9 years. It's been trending high. It started trending, if we go all the way back, 2016 is when this upward trend started. You can see here. Gold's been going up for a decade. I don't really like buying it up here. Although I said this when it was at 2400, and now we're at 3,400, 3,300. So what do I know? I might be wildly wrong. But I like to DCA into gold on dips in bear markets, and I don't know if that's right now. All right, we got about 2,000 people here. We still got 4 minutes left until the FOMC Minutes report goes live. So stick around, chat. Be ready. Let's see if we get it. Again, we're going to break this whole thing down. I see a DoorDash. Actual wife. Yes, we got lunch. Okay, how much is hair going to be? Question mark. Anyways, we're now over the 200 exponential. Here's gold right here on the right side. We'll watch gold, and we're also going to keep an eye on NVIDIA here. So I'm going to put NVIDIA up also. There's gold on the top. We'll put NVIDIA up just because it's a relevant thing in today's market. Q1 earnings for NVIDIA go live. NVIDIA is honestly testing the highs of the day as well. Look at the highs up here at 136.70s. NVIDIA is pretty close to that now. So, all right, chat. 3 minutes. 3 minutes left. We got about 2,500 here. Cheers to you guys. Yeah. Yeah, the gold bots always show up for FOMC streams. Gold FTW. Hey, I like gold. All right, 2.5 minutes, chat. 2.5 minutes. Can we break 3,000 people here for this stream? I think we probably will. We got 2.5 minutes left. And the trend is happening quick. We're at 25 right now. I think we'll probably break it. Hey, thank you, Family Guy. My guy, what's up, dude? All right, chat. 2 minutes left. 2 minutes. All right, so remember, the FOMC left minutes unchanged, or left rates unchanged at 4.25% to 4.5%. Unanimous vote. Statement noted uncertainty around economic outlook has increased further. And so remember that. Again, we're looking for the minutes report for May. This is going to be... All right. All right, guys. We have a minute and a half left. A minute and a half left. About 1 minute left. Do me a favor, hit the subscribe button, hit the like button. I appreciate it. Hey, thank you. All right, chat. 1 minute left. 1 minute. NVIDIA shooting higher. Gold sideways with everything else right now. Yeah, remember, this is the FOMC Minutes report. It's a 12-page document detailing why they made the decision they did in the last Fed meeting, as well as giving future outlook, which is the most important thing. We're going to use AI to break it down. Jerome Powell's not speaking today. This is a reaction to the last Fed meeting. And so we got 35 seconds. We did break 3,000 people, so thank you so much for joining us. We appreciate the love. I'll probably trade it a little bit. All right, chat, hit the live button next to the play button. Make sure you're fully caught up on the stream. Hit the live button next to the play button. You can also put it in 2x speed. We got 40 seconds left. This timer's a little bit early. About 15 seconds left now. The FOMC isn't today. This is a recap or a reaction to the last meeting. We got about 5 seconds. 5, 4, 3, 2, and 1. Here's the report. Let's see if we get a reaction to this. The algos will pick this thing up quick too. So let's watch it. Still waiting for it to show up. Yeah, so we're looking at this. Waiting for them to release it. Nothing yet. Remember, 2 p.m. All right, so here it is. So again, we're going to detail file break this down. The market has honestly reacted really positively to this report. Again, we are going to break it all down live right here. And again, we're going to give you the outlook first, okay? So participants agree that they were well positioned to wait for more clarity on the outlook. So most people are waiting for the clarity on the outlook. Now, we're doing the outlook first here. So the Federal Reserve's outlook presented in May 7th meeting paints a complex and cautious picture for the U.S. economy and monetary policy. Policymakers noted heightened uncertainty surrounding both trade and domestic policies, creating a challenging environment to interpret recent economic data and craft forward-looking strategies. The staff's projections now indicate weaker real GDP growth for both this year and next year compared to earlier forecasts. The shifts reflect the negative impact of the tariffs that are going on right now, which are expected to drag on demand more quickly and sharply than supply can adjust. The widening output gap means a significant slowing of economy activity, with the unemployment rate forecast to rise above the natural rate by the end of this year in 2025 and stay that way until the end of 2027. Participants agreed they were well positioned to wait for more clarity. Inflation expectations and projections have also been revised upward, so especially for 2025 due to the inflationary effects of tariffs, with a gradual return to 2% is expected by 2027. Risks are now seen still as skewed to the upside. Recent data indicate that short-term inflation expectations have gone up, making it harder for the Fed to maintain its long-term credibility. Participants expressed concerns that businesses may pass tariff-induced costs to consumers or even raise prices opportunistically amid rising inflation expectations. However, mitigating factors such as potential reductions in tariffs from trade negotiations, which is something that we're seeing, chat. Again, potential reductions in tariffs, a cooling housing market, and consumers' resistance to price increases could temper inflation expectations. Labor market projections are mixed, with the current employment data showing stability. Participants noted emerging signs of caution among businesses. Reports have paused or slower hiring amid policy uncertainty, coupled with possible headwinds from tariffs, point to a potentially weakening labor market in 25. This is sounding a lot like stagflation, yet nominal wage growth continues to moderate, reducing the risk of wage price spiral. And so, yeah, that is basically what the outlook is for the next few years. The market's honestly liking this. Maybe the market wants rate cuts earlier than expected, and so this is making people optimistic. Regarding monetary policy, the Fed adopted a wait-and-see approach, keeping rates unchanged at 4.25%, 4.5%. Policymakers emphasized the need for more clarity. Nearly all participants acknowledged that inflation risks have risen, with concerns that sticky inflation may persist longer than expected. So maybe we're not going to get earlier rate cuts. The Fed's prepared to act forcefully if inflation proves persistent, but also recognizes the takeoff between managing inflation and supporting growth. Participants noted the financial market volatility is heightened and markets have functioned relatively smooth so far. There's a risk that further stress could emerge, though. The resilience of the treasury market and behavior of leveraged investors like hedge funds remain a focal point, and the FOMC's forward outlook is cautious vigilance, to put it bluntly. The market honestly has reacted pretty positively to the FOMC Minutes report. And so honestly, we're getting a positive reaction here. All right, market's testing the top of this range. So we are going to post this. Yeah, so staff cited tariff policies implying a larger drag on activity than policies they had assumed in their prior forecast, so more tariff woes. Participants commented on April changes in typical correlation across asset prices. The committee voted to renew dollar and foreign currency swap lines. Durable shifts in correlations of diminishment or perceived safe haven status of U.S. assets could have lasting implications. So we're gonna, again, if you want this breakdown of the FOMC Minutes report, yeah, we'll put this up. So if you want to get the full breakdown, we put it on our x.com page at Beginner Trades. Again, we just read it all. I'll go over it again. Again, regarding outlook. Again, regarding outlook, the Fed's outlook presented in the May 7th meeting paints a complex and cautious picture for the U.S. economy and monetary policy. Policymakers noted heightened uncertainty surrounding both trade and domestic policies, creating a challenging environment to interpret recent economic data and craft looking strategies. So we're still at the top of this trend line, though. Look at this. So we're still there. Yeah, the market likes this for some reason, though. Again, it seems a little stagflation-y to me, and that's a made-up word I just used. But what I'm seeing right now from this report is that the Fed has inflation worries. They're worried inflation's going to get worse over the next few years, and it's going to take until 2027 to get 2%, which is their goal, right? We're also having fears of worsening unemployment, higher unemployment, weaker GDP data. And so it sounds a lot like stagflation to me. And again, the market, sometimes it's nonsensical. Sometimes the algos just pick it up. But we tapped the top of the trend line. We're still in it. Inflation projections have been revised upward. Labor market projections are mixed. Staff projections now indicate weaker real GDP growth for 2025 and 2026 compared to earlier forecasts. Negative impact of newly announced tariffs is the justification for this. Expected to drag on demand more quickly and sharply than the supply can adjust. The widening output gap means a significant slowing of the economy, with the unemployment rate forecast to rise above the natural rate by the end of this year in 2025 and stay that way until 2027 is what they're now projecting. Yeah. So that is where we're at now with this FOMC Minutes report. Yeah, I mean, I'm not an investment professional. Again, if you want a link to it, I'll give you the link, but it's a 12-page document. Again, so committee voted to renew dollar and foreign currency swap loans. Participants noted that they may face difficult trade-off if inflation proved more persistent while outlook for growth and employment weakened. Participants saw uncertainty about their economic outlook as unusually elevated. Staff projection for 25 and 26 GDP growth was weaker than their estimate at the March meeting. Staff cited tariff policies as implying a larger drag on the policies they had assumed in their prior forecasts. So, yep. Doesn't seem good, you know. Committee voted to renew dollar and foreign currency swap lines, noted that a durable shift in correlations or diminution of perceived safe haven status of U.S. assets could have lasting implications for the economy. I should have brought my glasses, but... All right. Nasdaq's up though. Nvidia's still pushing higher. It's at 137s here, chat. 137s. So again, we're gonna cover this one more time. Cautious, data-dependent approach. Economic outlook has been revised downward. Negative impacts of newly tariffs. Tariffs are expected to create a larger than anticipated drag on real GDP growth, exacerbating a widening output gap that could persist. Unemployment rate is expected to rise. Despite the moderation of inflation from its 2022 peak, the staff raised the near-term inflation forecast, anticipating a sharp rise in consumer prices as tariff amplifying price pressure. However, inflation is projected to gradually decline back by 2027. So, yep, that is what we got today. Stick around though, we're still going to cover a lot of stuff, so stick around. Such a long report. And give me a follow at Beginner Trades if you want a detailed breakdown. We got the detailed breakdown of all this stuff at Beginner Trades. We appreciate it. NASDAQ's still testing this high. Look at 21.5s up here. Nvidia's ripping up. Gold is pretty flat. You guys doing good? Also, guys, if you haven't already, check out Top Step. So if you want to learn to day trade, do not fund your own account thousands of dollars. It makes absolutely no sense to do so. Most day traders lose money. Doesn't matter what course you take, who you follow. Most day traders are going to lose simply because they don't know how to manage money in day trading. And so instead of risking thousands of dollars to day trade stocks, you need 25K. It makes no sense to do it freely. You need 25K to do it freely, that is. Try Top Step. Top Step gives you a 50K demo. It's $49 a month. If you can pass their test, you got to make 3K in profit on a demo without losing 2K first for the base one. Reasonable 2 to 3 ratio. If you can do that successfully, they fund you 50K with a 90% split. That's similar to funding your own account, and you get to keep your first 10K in profit. Very similar to funding your own account. The risk is $49 a month. Noticeably less risk, and it teaches you to trade in a structured environment. Learning to day trade in a structured environment like that just makes sense. It conditions you like Pavlov to trade correctly. Follow rules. And if you fail, it's not the end of the world. You're out $50. And most day traders in their first few years fail. Like, this is objectively true, regardless of what anybody else says. And so learning this way makes sense. And in terms of payouts, they've paid out hundreds of millions. They fund thousands. It's just a beautiful way to learn how to day trade. And you guys know me. I don't claim anything. I don't even claim to be a good trader. Understand CFDC 4.41. Hypothetical or simulated performance have limitations. I'm not an expert. Can't guarantee anything. Understand all this stuff on screen. You want to confirm it all with them. But genuinely good for learning. Most day traders are going to lose regardless, including here, but it's a lot cheaper to lose here, and it's a better way to learn, in my opinion, than putting up 5, 10, 20, 30 grand and losing that. And so if you want to check it out, I'll put the link up. Great way to help support the channel. I'll pin it to the top of the chat. Although, again, I get paid by them, so I'm naturally pretty biased in their favor. I always tell people the truth. Naturally, I'm pretty biased in their favor. So this was not a rate decision. This was a recap or reaction to the last FOMC meeting that happened May 7th, about 3 weeks ago. Every 3 weeks, guys, just to put this into perspective, every 3 weeks, you get an FOMC decision and an FOMC minutes. FOMC decision, 3 weeks later, you get an FOMC minutes. FOMC decision, 3 weeks after that. 3 weeks after that, you get an FOMC minutes. One of them, Jerome Powell, does a press conference. They make a rate decision, and they break the summary of economic projections and outlook down. The other one, they do a detailed reaction or breakdown to the previous Fed meeting, which is today, and they give you a 12-page document giving you outlook on the next few years in terms of inflation, GDP growth, so forth, so on. That's what was today. That's what we covered. Yeah, we're not going to ask for money. Sorry, brother. Yeah, I mean, it seemed a little bearish to me. Look at us hit this 21.5 level. We'll try to day trade this, chat. So stick around. We're going to try to day trade this. To me, it seemed a little bearish, personally. But hey, what do I freaking know? We're at the top of the trend line here. We're heading into NVIDIA earnings. That's the only thing. Like, all right, we're going to short this maybe. See if we come back down into this trend. And yeah, people are going to say, oh, paper trading doesn't work. What a ridiculous concept, you know? Like, I trade jiu-jitsu pretty regularly, right? That's like saying drilling doesn't work. You just got to go roll, and that's the only way. Never drill anything, just roll, you know? All right, so we were correct about this. Or at least we were originally. Now we're kind of retracing back up, but... All right, let's see if we continue breakdown. We're in this long-term trend, so I want to see if the trend like continues on a longer-term perspective. But I want to give it some time to make a little bit more from it if we can. And now we can just cut it break even if it goes against this, which hopefully it doesn't, but there it goes. little second here. Now we're in 4 micro contracts. Let's see if we break down some. I'm waiting for it. Irregardless. If interest rates come down, that eventually induces markets. If interest rates go up, it costs more to refinance debt and pay for entitlements. That injection is bullish either way, or am I missing? What injection? Bro, you don't train jiu-jitsu? Do I not? I mean, I gotta go throw that blue belt away, bro. From Henzo's. I don't know why I have that thing. Apparently I don't train it at all, you know. All right, so we're up here. Let me take some profit in this thing. We've been correct so far. We're gonna take a third, 2/3, or 3/4 of the position off. Up about 700 in this one. All right, let's see if we break down some now. I'm just going to cut it right there in the green. We got the little rejection at 21.5s. Paper trading does not make you feel paid. Yeah, no, I agree with that. I think that's why Top Step is useful, is because you're risking something. It's not just base paper. You're risking something. You're risking 50 bucks is what you're risking. If you fail, you lose 50 bucks, right? But it's better than losing 5K, 10K, 20K, 30K like you would if you lost your actual funded account. And so it's a middle ground, which is incredibly valuable. People can say whatever they want. Most of the time, they're just mad because they lost. But objectively useful. I don't know about objectively, but I consider it useful. All right, so we're breaking down here. I probably should have held that short position. Gold? Where's gold at? Nvidia's ripping up. Gold is doing nothing. So gold is doing basically nothing here. Christian. Yeah. I mean, people can get mad. People, you know, it's the internet. But most of the time, they're just mad with themselves for whatever reason. Yeah, we'll see what Nvidia does here. I'm ready for it. The New York Feds, they're going to start morning standing repo facility operations on June 26. Offerings will take place between 8:15 and 8:30 Eastern on June 26, which is a Monday. Hey, but I appreciate the donation, Arian. I'm trying to figure out what injection you're talking about, though, brother. Did you comment again? I have to go back and see it. All right, guys. Hey, stick around. We got Nvidia earnings later, so stick around. We're gonna hang out until Nvidia earnings, I think. In fact, I should probably schedule this Nvidia earnings stream, right? All right, we're starting to dip down under that 200 exponential. Look at this trend. I think NVIDIA earnings kind of makes this a little bit more interesting. Hold on. I got an NVIDIA earnings somewhere. So yeah, we got Q1 earnings. All right, so we're holding at that 200 exponential moving average here. We got a 1 trade since then. I haven't really done too much since. I can hear my son up there arguing with his friend about video games. I can't even get mad at him for it, though, because that's what you do it when you're his age. Alright. Alright, should we buy this dip? I think I want to. Hold on, let me buy this dip. I'll try to add to this. We got 1 micro contract though, so we're trading very small. I'm gonna buy into this. We got 5 micro contracts now. Let's see if it holds. There we go. We'd love to see it. We're gonna take a 40% off. Now if it turns on us, we'll try to just get out quick. Got a little cushion we can wait for. NVIDIA's been driving us higher though. NVIDIA's been helping us. NVIDIA broke highs of the day. It's now up to 137s. I'm gonna buy a little bit more of this actually. 5 contracts again. There we go. Take another little piece off here. There we go. Get out a little bit more. We're gonna cut it right there, break even. On the last little piece. And so again, just to recap the Fed minutes one more time. Again, you can follow me on x.com at Beginner Trades if you want like a full recap of it, but we'll read most of this. Again, the Fed revealed a cautious and data-dependent approach. Federal Reserve grapples with an increasingly uncertain economic landscape because of tariffs. The outlook for 25 and beyond has been revised downward due to negative impact of tariffs and broader global trade tensions. These tariffs are expected to create a larger than anticipated drag on GDP, exacerbating a widening output gap that could persist all the way through 2027. The unemployment rate is projected to rise above its natural level by the end of this year, signaling a cooling of the labor market, and is expected to remain elevated for multiple years. Despite this, inflation has moderated some, but despite the moderation from its 2022 peak, the staff raised the near-term inflation forecast, anticipating a sharp rise in consumer prices for 2025, specifically because of the tariffs. The tariffs, they're saying, are going to amplify cost pressures. Water's wet. However, inflation is projected to gradually decline back to 2% by 2027. So basically, the tariff drama is going to settle down over the next few years, hopefully. The risk balance for inflation is viewed as increasingly tilted to the upside, with recent data showing rising short-term inflation expectations and hints that firms might exploit the higher inflation environment to raise prices, Participants were especially concerned that tariffs on intermediate goods, compounded by supply chain frictions, could fuel persistency and inflationary pressures reminiscent of pandemic-era disruptions. Nevertheless, factors like consumer resistance to price hikes, easing of potential inflation through tariffs and trade negotiations, and a cooling housing market could help mitigate these pressures. Labor market currently solid, faces risks from this stuff as well. Businesses report limiting or pausing hiring. Nominal wage growth is moderated. They decided to pause rates. We'll see what they do. I think it's like, what, March 17th? Is what they're going to do, March 17th. Where's Bitcoin at? Let's take a look. We are currently at 107.6s for Bitcoin. We're not at the lows of the day, but we're better than we were. I'm going to buy this dip. We'll take 2 contracts, though, very small. If we get into the green, we'll add to it. If not, we'll just cut it. I don't really want to add to this. We're down less than $10 here. I think I'm just going to cut it down here. Looks like that was the right time too. Like I said, up about 700 on this one. Yeah, here's Bitcoin. Here's gold futures. I mean, it depends on what your definition of flying is. I mean, here's GC, which is gold futures contract. I mean, it's up, but like when you zoom out on the day, we're still down a little bit. I mean, here's a 5-minute chart to put it a little bit clearly. You know, I don't know if I would consider this flying, but it's up a little bit for sure. I don't know if that would, is that a flying expression, chat? I don't know. Hey, thank you, Cosmo. Yeah, well, we're gonna pivot to the NVIDIA stream pretty soon. So A gave me another message. You said the injection paid towards entitlements growing exponentially in the interest to investors, institutions, and foreign holders that then reinvest. You see what your original question was? Hold on. Sorry, hold on. I gotta find your old post. Okay, so if interest rates come down, that eventually induces markets. If interest rates go higher, it's more cost effective to refinance debt and pay for entitlements. That injection is bullish either way. Or am I missing? The injection paid towards entitlements growing exponentially in the investors. So lower rates stimulate markets, borrowing becomes cheaper, more corporate and consumer spending, lower mortgage rates support housing markets, stocks and other risk assets tend to rally as future cash flows are discounted. The government's borrowing costs also go down though. If interest rates go up, it becomes more expensive to refinance debt or fund new spending. The cost of Social Security, Medicare, which is the entitlements that you're talking about, it becomes more expensive. So the U.S. government ends up pays more of its debt. But the cost of entitlements is mostly demographics and policy, but not rates as much. And so there might be some connection there, but it can be bullish though. Government is paying interest to bondholders. But to be honest, I'm not completely sure here about like this nuance of it to be completely real. I'd rather just be honest. Yeah, I mean, so focus. You might want to look up what the FOMC Minutes report is. You know, just a heads up. It's all love. Just a heads up. Yeah, I mean, the reason we're getting this choppy price action is because of NVIDIA today. Like, you got to understand, if you want to attack ranges, right? If you want to attack ranges, how do you do it? You wait for a day in which we're probably going to get incredibly choppy sideways neutral activity, and you short the top, you buy the bottom. And again, not an investment professional, I have no freaking idea what you should do, but there's specific days in which the lead up to major catalysts in markets are going to cause chop. I told people this at 6 a.m. this morning, that the market was going to be flat today. Not a shock, water's wet, right? But there can be an edge in this. You know the market's going to be flat, so what have I been doing most of this stream? I've been shorting up here. I've been buying down here. And I think that makes sense, you know, because we're leading into one of the biggest catalysts this quarter, which is Nvidia earnings. Not the FOMC Minutes report. That's a pretty minor, relatively, you know, small thing. I mean, we got a couple thousand people here. That's great. I appreciate you guys. Nvidia earnings is bigger than today's Fed Minutes report, and we're going to stream that fully live as we always do. But you also have to understand that because of that, we're going to get choppy sideways neutral activity, and that might be a prime time to attack ranges. And that's kind of what we did today. I think it makes sense. Everybody's different though. Like, it's such a subjective thing, trading. Some people are going to like different strategies. Other people are going to freaking hate it. But yeah. The meeting is not today, focus. Today is a recap of the last meeting. The meeting is not today. Today is a 12-page recap or reaction to the previous Fed meeting that happened on May 7th. Jerome Powell doesn't speak today. This is not a Fed meeting. This is a reaction to the previous Fed meeting that happened on May 7th, brother, which is why I keep telling you to look up the FOMC Minutes report and what it is, because you seem to have a misunderstanding, sir. Good luck to you. Yeah, Nvidia earnings are going to be in about an hour and a half. Yeah, what did the dollar index do? Dollar index is ripping up. That can be good. It can be bad. It depends on the landscape of things. It's the FOMC is today, but it's the FOMC minutes, not the FOMC stream. So if you follow me on X, I mean, we already broke it down, the summary. We did a 500-word summary of the FOMC Minutes report at Beginner Trades. I'll break it down one more time here just to give you guys a pretty easy understanding of it. Again, the FOMC Minutes report revealed a cautious, data-dependent Fed as the Federal Reserve grapples with an increasingly uncertain economic landscape. The outlook for 25 and beyond has been revised downward due to the tariffs and broader global trade tension. These tariffs are expected to create a larger than anticipated drag on GDP, as well as the unemployment rate is expected to increase because of these tariffs, exacerbating a widening output gap in GDP that could persist through the next 2 years straight. Despite the moderation of inflation from its highs in 2022, the staff raised near-term inflation forecasts, expecting a sharp rise in CPI and PCE inflation for 2025 as tariffs amplifies cost pressure. Inflation is projected to gradually go back to 2% by 2027, though. The labor market, while solid, faces risks from tariffs mostly. Participants were specifically concerned that tariffs on intermediate goods compounded by supply chain problems could fuel persistent inflationary tariffs, or could fuel persistent inflationary pressures reminiscent of the pandemic. Hopefully we don't get that bad, though. I remember covering that. It was chaos. Nevertheless, factors like consumer resistance to price and potential easing of tariffs through trade negotiations and a cooling housing market could help mitigate some of this inflation fear. And maybe we'll get a rate cut this year. Yep, so that's basically what they said. So they didn't cut 50 basis points. They cut nothing because today's not a FOMC decision. So appreciate the love, though. Got a lot of follows here. Alright, we got a spammer, dude. Oh, maybe not a spammer. I was worried about a scammer, but Yeah, so GDP growth projections for 25 and 26 lowered due to tariffs expected to reduce demand and widen output. Inflation projected to rise due to tariffs, but expected to return to 2% by 27. Labor market strong, but may soften with unemployment rising potentially. Economic outlook uncertain is the FOMC Minutes report today. Next over, FOMC meeting June 18th. June 18th. What we got? Yeah, we have quantum stuff moving here. Again, we're sitting tight waiting. QUBT starting to rise is at 13s. I'm still watching NVIDIA because we got earnings in about an hour and 20 minutes or so. And again, I think I'm going to go ahead and pivot to the FOMC stream. Or not the FOMC stream, I'm sorry, the NVIDIA earnings stream. Apple is planning a major software rebrand with year-based names. Apple's successor to iOS 18 software will be called iOS 26. And again, stick around. We're going to switch and pivot to... Let me make sure we're going to do it. Pretty soon, we're going to switch and pivot to NVIDIA earnings. So stick around. NVIDIA earnings are scheduled for after the closing bell today. In about an hour and 10 minutes. So don't go anywhere. It should redirect you immediately to the NVIDIA earnings stream. I'm trying to make sure it is. And we're saved. Yeah, so... Today, yep. All right, so guys, don't go anywhere. We're immediately going to pivot to NVIDIA earnings. I don't give out advice. Understand I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade responsibly. Can't guarantee anything, guys. Don't copy me. I'm not an investment professional. I'm not liable if you lose. Be careful. With that said, we are going to be covering NVIDIA earnings pretty soon here, so let's go ahead and pivot to that stream. You shouldn't have to go anywhere. If for whatever reason it doesn't bring you to the NVIDIA earnings stream, for whatever reason, if it doesn't bring you there, thank you so much, guys. We broke 161,000. If it doesn't bring you to the NVIDIA earnings call and stream for whatever reason, yeah, here's the link right here. So there's the link right there if you want to check it out. Again, we're going to end it, immediately go there. I'll see you guys over there.